Ladies and gentlemen, welcome back to the channel. Number one, happy Easter to all of you guys. But let's get straight into this information. And first thing that I want to talk about is this comment from Kay Anderson. Thank you guys that comment down below. You guys make some very good points, and I do want to highlight this comment. He says, quote, "You can see where the whales believe it's going by the put open interest. I'm sorry, I have some calls just because they are cheap. But a reverse split is never a bullish sign. There's enough put open interest to make it move downward just by market makers delta hedging. I don't know, man. I trust my judgment over yours. No offense. I sold at $62 and have been riding puts on the way down while trying to catch bounces off support by trading weekly calls. I just do not see any super bullish catalyst on this anytime soon. I'll load up after the offering." Now, a couple things to point out there. The put open interest. This is something I talked about yesterday. And basically what it is, if you take a look over here on Ortex, you take a look at the option chain, and you take a look at the expiration on April 28th, you have 9.77% open interest on the call side, and 90% of the open interest held on the put side. And we dove further into this in the last video. The $3 put as well as the $2 put have about 90,000, give or take, options that are held in open interest, and the call side just has very little option activity in general. That's why you're getting this skew towards, so many puts relative to calls. And April 28th is the day after April 27th. That is the next time this court hears the case for AMC. Now, obviously, he's right. A lot of market makers are, and hedge funds, institutions, everyone basically is betting that AMC is going to fall quite big after April 27th. I don't necessarily believe that. Number one, usually when everyone is super bullish or super bearish, you want to take the opposite side of that trade. If the markets are irrationally exuberant, kind of like you're seeing now in technology, usually that's not the best time to go bullish or long on technology, whereas the opposite is true. During the lows in October, we bought the dip like crazy because sentiment was just too pessimistic when earnings were not clear yet. Before it was not clear what the Fed was going to be doing. It wasn't clear on what the economy was going to be doing. It was a little ahead of itself. Now, that's what I would argue the hedge funds are in this trade. They're a little ahead of themselves in terms of thinking this is a home run 100% chance. Actually, probably quite the opposite. I think it's very logical here that the judge did not dismiss the status quo order, meaning that nothing can happen until April 27th. That's well established, well aware of by most of everyone. But I think the judge really highlighted that this matter should not be taken quickly, that we need to figure out if AMC common stockholders are in agreement with this, because after all, 87% of shareholders voted. What's the harm in doing a common stock only vote? I think you would see a big discrepancy there, and I think that that's what the judge was ultimately highlighting. He wants to see happen is another vote with common stockholders. So if I were to go out on a limb, that's probably what's going to happen. I doubt the judge is just going to dismiss this coming on April 27th. Markets are pricing that the judge will dismiss this whole case on April 27th. If that is the case, well, then 90% put open interest makes some sense here. But if it doesn't, you're going to see shorts and hedge funds and market makers and institutional investors and just wealthy individuals that are betting on this arbitrage trade being caught severely off sides, and that would be a bullish catalyst. I think my base case scenario is at least one more court date. My base case scenario is not this gets dismissed and everything is fine and dandy for AMC coming April 27th for what they're trying to do, right? The reverse split. I don't think that is going to happen. I think you at least get one more court date. The option activity, where it's being priced right now, doesn't make a whole lot of sense. Now, after the reverse split, he does also make a good point that you're going to be diluted pretty well. You're going to be down in the toilet hole. And that would be a great time to go long on AMC as well. But I think from now until then, there is catalyst that can push us higher. I do differ on that because I think in and of itself, everyone being bearish to find out that it's not as clear cut as people thought is a super bullish catalyst, and I think that would send us higher. On top of that, you're going to have earnings later in this month as well, in the beginning of May, I do believe. So you got some important catalysts from now until then, but I do think that next core date probably going to be out to about June, and that is one of the main things I wanted to highlight here in this video. On top of that, let's get into the Ortex data. So if you take a look, you got 25.12% short interest of free float, 130 million shares that are currently sold short. Cost to borrow rates from Interactive Brokers at about 400%. Last update that we got on April 7th. Cost to borrow average last renew was 1,050%. Cost to borrow max was 1,050%. Cost to borrow average was about 900%, and cost to borrow minimum, it's weird, 8%, 378%. I mean, take it for what you will. Interactive Brokers serves mainly hedge funds, institutional kind of clients, wealthy individuals, and their cost of borrow rates are 390%. So I would imagine the cost of borrow minimum of 359% is pretty well spot on. So you got these numbers here that are ultra bearish, and again, it's because of this arbitrage trade. Think where the short interest was before this trade was announced. 21, 22%. You've seen tens of millions of shares be short in AMC, not to mention the derivatives and the options that since this arbitrage trade has been announced. There's been a lot of negativity and bearish pressure on AMC ever since. Now, the option activity, like I said, guys, over the last week, 803 orders totaling $258.55 million, positive order value of 4%. It has not been bullish whatsoever. Now, if we take a look at the option activity for the next option expiration, which is going to be April 14th this week, 22,443 calls currently in the money, 58,000 calls that are out of the money, 10,000 puts in the money, and 79,000 puts that are out of the money. So some decent option activity, but as you guys know, what tends to move AMC is not the options that we can talk about right here, right now on the option chain. It tends to be those weekly options that come through and can swing things quite a bit with the delta hedging. Now, if we take a look at the calendar for this week, if you guys are unaware, well, you're about to find out. I know we've covered this in another video as well, but I think considering we're starting the next week, it's going to be important to go over it. And starting on Wednesday, I'm going to start on Wednesday because Monday and Tuesday have very small data points, nothing that is going to give the markets a move. Keep in mind, though, markets were closed on Friday when you got the unemployment rate that did tick down lower. You were expecting that to hold steady at 3.6%. It went down to 3.5%, and you did beat just a little bit on the jobs numbers, but a lot of people were saying if you take out government jobs, just the private sector, you actually missed expectations by quite a lot, coming in at about 187,000 jobs compared to that estimate at about 230,000 jobs. So government really kind of saved the day on this report, and a lot of people aren't buying it. Now, 8:30 in the morning on Wednesday, you're going to get the inflation numbers. I will tell you right now, the only thing that matters is the core inflation rate month over month. You're expecting that to come in at 0.4%. Last month's reading was 0.5%, so a slight deceleration, but still far too high. And then you get the Bank of Canada monetary policy report as well. It is highlighted in red, expected to be a big catalyst. I'm not convinced considering the catalyst that we have for our markets this week. Now, 2 p.m. on Wednesday as well, the FOMC minutes will be coming out. That's a transcript of the last Fed meeting, if you guys have not heard that already. It doesn't always give us a huge reaction, but it can. 8:30 in the morning on Thursday as well, you are going to get PPI, Producer Price Index, Producer Price Inflation. I don't care what you want to call it. That's what it stands for. You're expecting a positive 0.1%. Last month's reading was a negative 0.1%. Initial jobless claims as well, expecting that at 237,000, up last week from 228,000. So some deceleration in the labor market as well expected for this upcoming week. Retail sales month over month for March, you're expecting 0.9% to the negative side. Last month's reading was negative 0.4%. So you're expecting some negative numbers here. And some of these exterior data points will also be important. Retail sales excluding autos, import prices, retail sales month over month and year over year excluding autos. Those will probably be some of the most important ones. Manufacturing production, capacity utilization, industrial production, so on and so forth. Anything that can give us a sign of where the economy is going will be important. That's basically the long story short. Now, coming out at 10 o'clock as well on Friday, the Michigan Consumer Sentiment Survey will be coming out. Now, if we go ahead and take a look at earnings whispers, I actually did not go over this beforehand. So we are going to do this together. Okay, I went past it. Let's see. For the week beginning April 10th, most anticipated earnings you are going to get on Monday after hours, Tilray. Tuesday pre-market, CarMax and Albertsons. Wednesday pre-market, you're going to get basically Louis Vuitton that does report. Wednesday after hours, Sportsman's, Rent the Runway, companies we really don't care about. Thursday pre-market, Delta, Progressive. Thursday after hours, Lakeland Industries and Waft Bank. Friday pre-market, that's the big day. JP Morgan Chase, United Health Group, Citi, Wells Fargo, PNC, BlackRock, and Vinra. These banks will be vitally important because it will tell us not only the state of the consumer, but obviously with the banking crisis, how bad is it getting? Is it getting worse? That's really going to be a main story of this week, is anticipation of bank earnings. On top of all of the other catalysts and data that comes out this week, it's going to be massive. Absolutely huge. So do keep that in mind. Now, if you take a look at some of the technical switch gears to talk about AMC here before we wrap up this video, I really do think you are range bound, so I don't think there's any sense of doing like a price prediction in between $5.50 and $4 per share. Yeah, say happy Easter. Say happy Easter, princess. She was saying it all morning, but yeah, I do think you're range bound in between $4 and $5.50 until we get new information, until we get a new catalyst of some sort or some magnitude. So not really expecting a whole lot for this week. If we do get something, well, that's good. We'll take it. The volatility leads to opportunities nonetheless, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.